Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 19th April 2021 in the international market. Let's start today's trading day with positive news around US economy. Number 1, US retail sales jumped 9.8% in March, which was well above the Dow Jones estimate of 6.1 growth. Number 2, housing starts jumped 19.4% month on month in March, while building permits rose 2.7 percentage points. Number 3, the University of Michigan's Consumer Sentiment Index rose in April to 86.5 from 84.9 the month prior. Number 4, there were 5.76 lakh new jobless claims filed for the week ended for April 10th. This was the lowest number of weekly unemployment insurance claims since March 2020 and well below 7.1 lakh forecast by economists. USDINR closed at 159 percentage points and 30-year closed at 2.26 percentage points on Friday with this positive set of news. Let's look at the interesting fact. Last year on 19th April 2020, Chinese 10-year bonds were trading at 2.5 percentage points and now they are trading at 3.18 percentage points, which is a pre-pandemic level. Also in 2020, India saw 13.7 billion outflow from Indian debt market, whereas China saw 186.1 billion inflows in their bond market. In the crude oil market, crude is trading at $66.42 per barrel, short-term range 65 to 67. As you know the night's position, we are long in crude at $60 per barrel, still holding with 11% gain. In the currency market, dollar index or DXY is at 91.7. Today's range is 91.53 to 91.96. DXY has a good support at 91.30, which has not been tested for many weeks. USDCNY or Chinese yuan is at 652. USDINR with a high of 74.76 closed at 74.35. USDINR's range for today seems to be 74.45 to 74.85. As we had warned you on Thursday's podcast that 74.70 and then 74.50 are possible, and in subsequent 2 days, both these levels have been taken out. Now this is a phase of consolidation and USDINR is finding an equilibrium price. At the same time, US Treasury has kept Indian rupee on monitoring list for currency manipulators. The next direction for USDINR is not clear and we'll have to wait for further clues. But the structural weakness due to second wave of COVID-19 and possible nationwide lockdowns suggest it will reach 75.50 again in medium term. In the domestic market, Friday was an action-packed day with much of a volatility for Indian bond markets. First, the PD's auction underwriting fees for a 10-year paper at 47 paisa. Just to remind our listeners, typically an underwriter gets 5 to 7 paisa for a 10-year maturity, which is approximately 1 basis points. But we have seen in these unusual circumstances, the underwriting fees have shoot up to 6 to 7 basis points or 45-50 paisa also. So the market had a fear of a much larger devolvement on PDs as the 10-year supply was rupees 14,000 crore with a total auction size of rupees 26,000 crore. Hence, the fear was reasonable and high underwriting commissions aggravated this fear. Finally, RBI decided not to accept any bids for 585 GS 2030 and let go this rupees 14,000 crore auction for 585 2030 with rupees 0. I repeat, with rupees 0 borrowing. They did not accept any of the bids. RBI finally won this round of battle, but is it worth to fight and defend lower yields is a question in everyone's mind. With the above auction results, 515 GS 2025 closed at 559 versus 564 the previous trading day. Friday's high was 565 for 515 2025 but market closed 6 basis points below the day's high yields. After the devolvement, after the cancellation and rejection of all the bids, 585 2030 closed at 608 versus 612 the previous trading day. Friday's high for 585 2030 was 617 and the market closed 9 basis points below the day high yields. Again, purely due to the cancellation of a 10-year benchmark auction. Remember, Knight Research had warned you to look out for underwriting fees for Friday's auction. Knight Research had also advised our clients to stay away from the auctions for now. We still recommend and urge everyone to complete their HTM AFS shifting and lighten your portfolio. This year will bring a lot more volatility and finally benchmark yields will rise to 650. This year, focus on saving capital or mark-to-market losses rather than making money. In case if you need any help in HTM AFS shifting or you want to avail our services, you can reach out to us at support@knightfintech.com or parthesh@knightfintech.com or call us directly on 9930307466. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Knight Fintech. See you tomorrow with the new episode of Night Snippets.